Hey Josh, I heard you can get some kind of tax breaks because of your RV. Is that fact or crap? Well, let's find out. Hey everybody, Josh, your RV nerd of Bish's RV, as the sign over the door probably already helped you figure out. I'm an idiot. Anyway, I'm going to start this kind of series of RV FAQs. I've been doing this now for over 15 years, and this is a question I hear people ask regularly. Is it true that you can get some kind of tax breaks or deductions or something like that because of your RV? This is something that you'll sometimes hear from like an RV dealership's financial kind of person who's going through different like loan financing terms. And if I'm being real about this, because I always try to be just totally clear and candid, I think that it is something that is shared with a lot of people to help just get them to say yes to buy the RV. The short answer to this question, are there potential tax benefits involved with having an RV, is yes, but there's a lot of different caveats. And I want to really stop, collaborate, and listen on this real quick. I want to make very, very clear, I am not a tax financial expert. I do not want you making a major RV purchase based off some very surface level knowledge that I'm going to share within this video. Before you make any major decision related to anything that affects your taxes or anything like that, please see your tax preparations specialist. That's all they do all day, every day, is learn things like tax codes. I can give you the information to know what questions to ask them, to know how this may or may not apply to you, but I am not trying to share this information with any sort of hope like maybe we can persuade you to buy an RV or anything like that. I'm going to give you the good and the bad, help educate you, and let you decide if this is something that might work for you. And if you appreciate the difference there, hit that subscribe button, and let's start peeling this onion apart. Also, I'm gonna go get some gloves. It's freaking cold out here today, dude. Are there tax deductions for using my RV as a business? Yes, assuming you're using the RV for business use. I know that sounds like I'm just talking in circles, but it's amazing the number of people that won't exactly grasp the differentiation there. Basically, if you're using your RV as something like a mobile office or something like that, it's directly used for business purposes. You're not just using it to sleep there as a landing pad like a hotel room. You're not using your RV like a hotel room while you leave to go do the work. If you're working with or in the RV, there could be some deductions. Certain expenses can be deducted related to the RV's use. This can be really handy for, I guess you call it like the digital nomad kind of group, or like RV travel bloggers or something like that. That is a way that they can help offset some of the expenses of running their business and owning an RV. The thing here is, to be able to prove this to the IRS, you need to keep some meticulous records, because nobody wants to get audited and then get caught and they go, well, we decided you owed us a bunch of money after the fact. So you need to track your mileage, your use, and even the amount of time you're using the RV for business versus personal time. Like if you're working 8 hours a day in the RV, but there's 24 hours in a day, you can only deduct up to 1/3 of the expenses. So here's another example. If you are work camping out of the RV, you're running a business out of the RV, and you're using the RV for 60% of the time for your business, but 40% of the time as a personal item, you can only deduct up to 60% of some of those deductible expenses from the applicable taxable values. Just because you're using it part of the time for business doesn't mean you can deduct 100% of all the expenses. And I think that is something that could easily get somebody in hot water. Again, I'm going to say it 100 more times. Speak with your tax preparation professional specialist person, okay? Can I deduct RV rental income? And the answer there is yes, as long as it's proportionate to the amount of time the RV is being used as a rental. So for the purposes of this example, let's say that you use your RV part of the time and then you rent it out some other part of the time. Basically, it's not exclusively an RV rental, although you could do that too. I know plenty of people that do. The portion of that time where the RV is being used as a rental, things like maintenance, insurance, repairs, those things, that portion of time could potentially be utilized as a potential tax deduction. But here's the thing. Once again, you're going to need to keep some very, very detailed records on this, because you are now operating what's known as a mixed-use property. Kind of like if you owned a second house that you rented out while you weren't there, but you do spend some time there. It's now both a personal residential property, but also a potential business source. So you need to track what expenses relate to what time and in what proportion. Also, you got to keep in mind, any of the income that you generate from that as a result of it being a rental is also something that you'll need to claim when it comes tax season. And another just easy numbers quick example. Let's say the RV is in use, not just sitting there waiting, but actually in use for 100 days a year. You personally use it 25 of those, you have it rented out for 75 of those. That means that up to about 75% of the possible expenses related to that RV could be applicable as potential deductions. It doesn't matter that there's 365 days in a year, it only counts the amount of time that it was used. Again, that's why very, very specific records keeping is very, very important on this. Is it true I can deduct the depreciation of my RV? Again, the answer is yes, but if it's used as a business or as like you're renting it, essentially. It's not something where, hey, I take my family camping and we happen to have an RV loan, can I deduct that interest? No, that's purely personal use. That's not going to be the case. If you're using it as a business or renting it out, you can deduct that depreciation over time, which could be a potentially significant tax savings tool to help reduce your taxable income, as well as offset some of your operating costs. However, you may have to pay back some of that claimed depreciation if you eventually resell the RV at a gain. So again, using some very quick, easy figures right here. Let's say you buy that, you have the $100,000 RV, because that's just an easy number, and you use a straight line depreciation method of say it's going to depreciate $20,000 over 5 years, so that after 5 years it effectively has $0 value. Okay, if you sell that RV and you sell it for $60,000, you're basically going to have to give a big chunk of that money back because you've already claimed it as a loss, but it turns out it wasn't a total loss like you had claimed. So you have to make good on your claim effectively. Again, contact your tax professional. Another thing to kind of keep in mind here is that there are sometimes different regulations as they apply to RVs and taxing and claiming your taxes, etc., that vary from state to state. We don't have just one national guideline here. For instance, just off the top of my head, I know that like South Dakota and Montana have some very friendly laws and regulations as it relates to RV taxing in certain cases, and that can be very exciting for some folks. Now, it's not necessarily impossible to re-register your RV into another state, but the way that two different states play ball can also be very different. So I can't give you a good estimation here, because if you're re-registering from Tennessee to Georgia, it could be different from Indiana to Michigan. Each state has their own way of doing their taxing stuff, and certain states like New York and California, it can be very, very difficult and effectively to try to accomplish something like that after the fact. So it's not necessarily impossible, and certain states have some very significant tax savings benefits, and especially as you get into the bigger, higher dollar RVs, there can be it can definitely be worth someone's while to do a little bit of research on that, because that could be a case where if you don't take your time to look into it, you could be penny wise and pound foolish there. So I guess in closing, yes, there can be, in certain circumstances, some very potentially significant ways that you could use your RV within the taxation scenario. But I cannot say this enough. There are some very specific, strict rules, laws, guidelines, regulations, etc. governing all of this. And I will say for one last time, don't dive headfirst into something and not do your due diligence here because you saw some guy with a black hat on YouTube talking about it. My goal with this, again, is not to persuade you to get into, to buy anything. This could apply to people who bought from Bish's RV, or not. It could apply to existing RV owners. But before you do anything related to this video, my goal was simply to give you an idea to contact your tax professional and have them guide you through all of this, because there's a reason people have entire livings built around nothing but tax preparation. You know, it's a very tricky minefield to walk, especially if you don't know what you're doing in there. So I hope you appreciate, again, how we've kind of kicked off this little RV FAQ series. If you have some other kind of burning questions, when I can see a bunch of people asking the same thing, I will do my best to look into it, learn at least enough to tell you how to navigate it to the next step and put it on video here for you. And if you appreciate how, you know, you ask the question, we answer it and get you going, hit that subscribe button, like our video, and let me know what you want to hear about next. So take care, stay safe, have fun, and happy camping, everyone.